how was the experience of overall dealing in the gift ecosystem? And more importantly, as we have in the latest budget, that the time period for doing re-domiciliation has increased. So you think more and more funds coming in that space from wherever around the world will get re-domiciled to GIFT City?
So, Sachin, coming to your first question, right? Why did we even move? See, we were managing offshore institutional money way back since 2008. And, I used to always wonder that foreign investors wanting to invest in the Indian markets, why did we need to have a complicated structure outside of India, right? I think it's very clear that for money to be invested in India, the best talent resides within India. As they say, the locals know the best, right? I think there's a lot of fund management talent in India. And it's always great to be closer to where the action is.
Hello everyone, welcome to Kotak Conversations, the platform where we speak to the sharpest minds on the street and speak about the issues, the challenges, the opportunities that can affect businesses. Friends, today we want to speak about the evolution of GIFT City. In fact, more about the funds evolution in GIFT City. It is heartening to see how in last about 3 to 4 years, GIFT City is increasingly becoming a jurisdiction of choice for the funds. More than 140 funds already registered. Some of the large sovereign wealth funds invest in GIFT City. And all this is possible because the relentless backing of the regulator out there, the improving digital infrastructure, improving physical infrastructure. Kotak is, of course, happy to be and proud to be a part of some of these funds as a banker and a custodian. But what we thought is it will be prudent to talk to somebody who has already taken a plunge, who's already have a fund in GIFT City, and share their experiences, their challenges, and opportunities for working out of GIFT City. So it's my great pleasure to welcome Hiren Ved, CIO and Director on Alchemy Capital. Welcome, Hiren. It's great to have you on the show.
Thanks, Sachin, and thanks for inviting me for this.
So, Hiren, let's plunging into the conversation straight away. You are not only have a fund in GIFT City, but you are the first fund who actually re-domiciled from Mauritius to GIFT City.
Yeah.
Which is the first fund, that's the first step that you took. So, a few questions relating to that act. One is, what is the rationale for doing so? What is the advantage that you saw? How was the experience of overall dealing in the gift ecosystem? And more importantly, as we have in the latest budget, that the time period for doing re-domiciliation has increased. So you think more and more funds coming in that space from wherever around the world will get re-domiciled to GIFT City?
So, Sachin, coming to your first question, right? Why did we even move? See, we were managing offshore institutional money way back since 2008. And, I used to always wonder that foreign investors wanting to invest in the Indian markets, why did we need to have a complicated structure outside of India, right? I think it's very clear that for money to be invested in India, the best talent resides within India. As they say, the locals know the best, right? I think there's a lot of fund management talent in India. And it's always great to be closer to where the action is. Unfortunately, we didn't have a regulatory environment at that point in time. So we had a 100% subsidiary of Alchemy in Singapore, which was the investment manager. The funds were domiciled in Mauritius. The feeder funds were in Cayman. So we had a fairly complicated structure, right? And literally, I had to export talent to Singapore. So I had to tell one of my colleagues to move to Singapore with his family so that he could be the fund manager of our offshore fund. And I think finally the Indian regulatory ecosystem realized, and I think more than that, I think it was the vision of our Prime Minister that there should be an offshore financial center within India. Why should we export capital and talent outside of India to manage money in India? It just made no sense. So finally, I think we were quite happy when the whole gift ecosystem came into being. We were eyeing it, but obviously we wanted everything to fall into place, the taxation, the regulatory, the structure. And obviously it has to be acceptable to global investors. They need to feel comfortable that this is a jurisdiction which is acceptable, which is stable for global capital to come in. So when all the ecosystem got into place, I think we were almost ready. And we decided that it was time to unwind all of that complicated structure and move here. Uh, and I think, thanks to you and your team, uh, the experience was pretty seamless. I think the regulators were very, very eager. They were, very facilitative of the whole process. They kind of helped us in at every step. And I think we were also able to convince our investors that it makes sense, right? One is that we want to be closer to where the action is. Secondly, the costs were lower. So it was actually benefiting our investors because at the end of the day, if the structure cost is high, the investors, the end investor end up bearing that. And you want to make it competitive for them. And in all honesty, we also passed on a lot of the benefit of lower operating costs to our investors. And I think they understood that, right? And I think if you look at the trend now, is that increasingly global institutional investors, whether it is pensions, endowments, family offices, there is a preference for people who are on the ground, right? There were days when if you were an Indian, if you studied in America, you worked with Goldman or Morgan Stanley, and if you set up an India fund, you could raise money very quickly because there was familiarity, right? From an investor's perspective, ki, theek hai, this guy has been in the America, he has studied in America, you had your friends and ecosystem there, it was easy to raise capital. I think over time, as people realize that there is value to giving money to local managers because they really understand the nuances of the country, they understand, they are closer to the ground. I think that it made a lot of sense to move to Gift City. And I think the very fact, I think you mentioned early on that already 140, 150 funds have been set up. I see no reason why over time more and more funds will be set up in Gift City, right? And I think the idea is that they want to create not just for one asset class, which is equities, but they want, like for example, in this budget, aircraft leasing, ship leasing, they want global treasuries to come here and do FX trading or whatever that they want to do and make this as a real global hub. So I think this jurisdiction will become more and more popular. And frankly, we don't need to go to a DIFC or a Singapore or any other jurisdiction. India is going to be a very large economy. We already have a 5 trillion plus market cap. So eventually global capital will come here. All we needed was to give them the right environment, the right regulatory framework, which they could trust. And I think that in this case, it made a difference because the Prime Minister was leading it from the front. And then the IFSCA regulators and everybody was just fantastic to make it happen.
Wonderful. I think you did mention cost, but did not mention tax. I think, see, these are the things that people talk about first when talk about jurisdictions.
Correct.
I mean, what you are saying is pretty commonsensical.
Yes.
That if you are investing in India, if India is offering you a jurisdiction with all the facilities, why not take it? It is pure commonsensical to use Gift City. Wonderful. So that is something which is very logical, and I hope that listeners will take the clue from it. Then you're always on the road and talking to the LPs, raising money. Now the question to you is, which many of the fund managers and the business managers will have, the LPs, when they hear about the Gift City, is there a kind of a reservation, or they prefer Singapore, they prefer Mauritius, they prefer something else, or they are, as the fund manager is acceptable, the jurisdiction is acceptable, the LPs don't mind a specific gift city as such.
Look, I think obviously initially there will always be questions, right? So, what is Gift City? And, you know, uh, they're not familiar, right? Also, somewhere at the back of the mind, they believe that will they be asked a lot of questions? And, they see, India is a very small part. We have to appreciate that India is a very small sleeve of what the global investor allocates out of its global portfolio, right? So what they don't, so they understand the attractiveness of India as an investment destination. They know that there is returns to be made. What they don't want is operational hassles. They don't have a massive back office to, keep answering queries and, so on and so forth. So I think to that extent, there was always a little bit of a question that, what is going to be our involvement? Is it going to be very tedious? And I think there we were able to give them comfort. And I think they also understood that this made a lot of logical sense, right? And I think the ease of business that has been propagated, and in the early days, I'm sure you did the same thing. We were liaising with the regulators very often, right? And we were telling them that, look, we need to facilitate these things if we need these investors to come in. And they were listening with a very open mind. And I think they really understood that if you want to make this a practical jurisdiction, then, those are the steps that you need to put in place. Taxation was another big area which got solved. And we also told them that, look, I mean, if the easiest thing to do is to get the existing funds to redomicile, because that's the low hanging fruit. But you need to have the least tax impact for people to redomicile. And I think it was so seamless for us, right? We didn't have to sell a single position. There was no unnecessarily capital gains tax, no unnecessary transaction and churn that needed to be happened. And I think that eventually the people on the other side are also very rational. So if, I think that they bought into the fact that we needed to be closer to the ground, that operational costs will be lower, that there will be tax benefits. Um, and, we were successful. And I think that there is now greater credibility about India. And India's image, all of that also adds up, like a little bit, because sometimes you still have the image of the old India with a lot of controls and uh, you know ad hoc policies, retrospective changes and stuff like that. So initially there could be a hesitation, but I thought that investors and LPs were a little more acceptable to this. And then obviously we did our bit of giving them the comfort that everything is going to be fine. And I think it's been now over a year plus 18 months since we've moved. We've not seen any issues at all. In fact, we were able to move a very large pension fund account from Singapore to Gift City, and it was seamless.
Wonderful, I think. Yeah, that makes a very strong point. Little bit moving from the Gift City in that sense, but we are in the first week of February and we can't not talk about the budget. I think last Saturday, Honorable FM unveiled the budget. What are your key takeaways from the budget?
I think the way I look at it is that, post COVID, India's growth engine was working on one engine, which was government capex, right? And we were seeing that over the last few years, consumption at a very broad level was struggling, especially at the lower end consumption, right? And that needed a push. And I think finally the government realized, just like in 2019, if you remember, the economy was slowing down. I think GDP had almost come to 4% growth. And at that time, they administered a corporate tax cut, right, to get the sentiment going. This time, again, we had a slight slowdown in the economy because of elections and a lot of other things. Uh, and this time, rightly so, they again cut taxes, but this time they cut taxes for the middle class to get consumption going. So I think the way I think about this is that now you have a twin propeller engine, right? There was earlier the plane was flying, but it was only flying on a single propeller. Now you have both the propellers moving. Hopefully, this will be a more sustainable and stable growth. So I think they've taken a bet. And sometimes, like we investors do, we take a call, we have to take a bet. And I think the government has come out and taken that bet. Uh, and I think that it has kind of changed the mood in the country, right? Because the middle class always felt, yeah, we are always at the receiving end. We only get taxed more and more. I think this time, they took that. But more importantly, they did it and still maintained the sanctity of fiscal discipline, right? Uh, I think the market would have been happy even if you had a 4.5 or 4.6 fiscal deficit. But I think I've always had this view that this government is very hawkish when it comes to fiscal discipline. And I think they did that because they wanted to set a base for the RBI to cut rates. And also, there is one eye that we have now for a long time to get a rating upgrade, right? So, I think, frankly, at a macro level, we've shown our credibility that we are one of the very few large economies which is actually cutting debt. Most other economies are still knee deep in debt, right? And to therefore, I think this is a very credible thing, that the balancing act that they've done, that you opened a new engine of growth without sacrificing this thing. Also, I think that there was an overwhelming perception initially that this has come at the cost of capex. But I don't think that is the case, right? Because people just looked at the headline number. They said, okay, 10.2 trillion capex is going to 11.2 trillion. So that's only a 10% increase, right? But actually, if you see the numbers, because of elections, they were not able to spend. So from April to December, for which the numbers are readily available, the government has only spent 6.8 trillion. And the revised estimate was 10.2, which means we still have 3.3 trillion to spend in Jan to March. And then you add 11.2 trillion for the next full year. So if you add this 15 months, we will be spending 14.6 trillion in 15 months, which is roughly 97,000 crores run rate per month, okay, which is 29% higher than the run rate from April to December that we've actually spent. So when you go a little bit deeper and look at the capex numbers, because capex is all cash accounting, right? So if your run rate has been 50-60,000 crores and now it is going to be closer to 1 lakh crores, then I think the next 15 months there is a significant thrust of capex which is still left to be done. And then on top of that, you have the 1 trillion tax cut, which in turn hopefully will have some multiplier effect, and at some point in time should also bring in private capex. So I think on the whole, I look at the budget very positively. Obviously, there are other factors right now which are at top of mind for investors, which is what's happening with the trade policy of Trump, and what are the uncertainties that may be going around. But I think as far as what we had to do, I think we've done the right thing.
Wonderful, very encouraging. Actually, this particular twin engines together probably can propel our growth.
Yeah.
Right. I've been watching your podcast, and you have been very vocal and very bullish about the digital space in India. Obviously, all of us are very proud of the Aadhaar and the Jan Dhan Trinity. I think we have, according to where are we in this journey of digital infrastructure, and therefore the advantages falling out to the entire population scale, especially in the background of DeepSeek and ChatGPT. Where are we on this journey, according to you?
Yeah, I mean, I'll talk about the AI bit, which is very topical today, right? But I think that this is nothing short of revolutionary, right? I think the government built this digital infrastructure, or I call it the digital highway, right? Essentially because they wanted efficiency in delivering subsidies, right? They didn't want any leakage in between. They wanted the money to reach directly into the hands of the people who need to get it, right? But the advantage of building this digital highway is that today the private sector and private entrepreneurs can use this digital ecosystem to build businesses, right? Or make their processes more efficient. So today, your ability to move money because of UPI and the fact that we have this whole switch which is connected to the entire banking system and down to the small chaiwala as well, right? It's nothing short of revolutionary, right? So, I always give this example that what this has done is that this will unlock India's entrepreneurial energy, right? Could you have thought that a first generation entrepreneur, this would not have been possible had it not been for this digital ecosystem that we have built? And mind you, the top two food apps have not come from any of the established business houses, the Tatas or the Ambanis or the Mahindras or whatever, right? It's actually come from a first generation entrepreneur. So I think two things are very revolutionary. One is that we have today access to risk capital. Today, not only the traditional VCs and private equity funds, but even ultra high net worth individuals and family offices and individuals are willing to risk money and capital behind new ideas. I'm sure you guys run a fairly successful wealth business, and a lot of your wealthy clients are today much more open to funding early stage or mid stage growth companies if the idea is great, right? So, today, what we have is this fantastic opportunity where risk capital is available. This was never available. And you couple that with the digital infrastructure that you have built in place, and that creates a very potent combination to allow young entrepreneurs with bright ideas to come and capture and build great businesses, right? And I think that's the rejuvenation that was required. You needed competition, you needed young blood to come in, you needed more risk taking and entrepreneurship to come in. And I think that's very exciting to my mind, right? This combination of access to capital, risk capital, and the digital infrastructure means that there are several possibilities that can happen. So we are quite excited about that. And I think today, I give this simple example, right? I mean, the help in my house is actually a person who's come from Bengal. Now, in the good old days, when you gave them your monthly salary, it would take them a couple of days to send that money back home to their parents. Today, it happens in a second. So the cycle of money moving in the economy has greatly improved because of the digital infrastructure that has happened. So whether it is lending, whether it is delivering subsidies, whether it is connecting small merchants to consumers, business to business, I think it's nothing short of revolutionary.
Points well made. I think the 20 years back, say, I think somebody, some young entrepreneur wants to have a fantastic idea but never had a capital,
Yeah.
and he will end up working somewhere else. I think today that capital is not a problem, and therefore, and reaching out to the, with the digital infrastructure, you can reach out to the smallest part or the deepest part in India, which is a great revolution. I agree with you.
These FMCG companies, and not taking away anything from them, but the levers and the ITCs and the Nestles of the world took decades and decades to build a very arduous infrastructure. Wholesalers, retailers, sub-retailers, the whole network of warehouses and very complex supply chains to reach the smallest village. And then they sachetize their products to make it affordable, 1 rupee, 5 rupee, 10 rupee sachet to reach to the. But today, let's assume there is a company who wants to make this cup, for example, right? Today, you could advertise on social media. You can actually outsource your entire logistics to a third party logistics company, and your payments can all be digital, right? So today the time to market for a new company to reach the consumer, because everybody today has a smartphone, right? I mean, you have 850 million smartphones in this country. I mean, people from the remotest places can actually access products and markets, and you as a producer of goods and services can access that customer. I think that's phenomenal.
Totally agree. Now, let me change the track again. Let's talk about a lot of distributors will be looking at this. And when you look at the investment habits, I mean, we have decisively changed, hopefully, from a savers country to investors country.
Yes.
Looking at the SIP flows. Now, when you analyze the investing habits, are there any trends? Let's say millennials invest in a particular manner, the older generation invest in a particular manner, gender-wise or geography-wise, the instrument-wise. Are there any trends that you are seeing in the investing habits of the new India?
I think that again here technology has vastly democratized investing, right? So there are two trends. One is that if you see over the last few years, investing in fixed income on a post-tax basis relative to equities has become less attractive, right? Secondly, access has become far more easy today. And therefore, I think that while traditionally the western and the southern part of India, which was a little more developed and people were a little more exposed, were the people who were largely investing in financial products uh, and equities, right? And the rest of the geographies, broadly speaking, barring probably Delhi and some of the big cities, were still, Delhi, even then, if I still remember 7, 10 years ago, most of the people would be only interested in investing in real estate, right? It was not very natural for them to invest in equities. I think a lot of that has changed, right? So, there is a clear shift towards equities and other alternatives. And today, as I told you, what was a preserve of just a few VCs and private equity, that industry had got defragmented, so to speak, or disrupted to some extent, because today a high net worth individual can participate in a private offering, right? Because obviously wealth managers have proliferated, access and knowledge about more products is available because today of the internet and everybody can get access to information. So I think very clearly access has helped, proliferation of information has helped, and habits are changing because now the younger generation is willing to take risk, right? The older generation still wanted to have a little bit of a nest egg. They wanted some physical assets, right? So gold, jewelry, real estate. I'm not saying that's going out of fashion. That still are large asset classes. But when I look at the younger people, they want to trade, they want to wet their hands, and hopefully that over time, as they realize that there's not much money in trading, they will then start investing or doing their SIPs or accessing products through mutual funds and so on and so forth. I think the other big trend in the capital market that we are seeing is that the depth and liquidity that has improved. If you remember in the good old days, if the promoters sold even one share, there was always a doubt कि ये क्यों बेच रहा है? Why is the promoter selling? Today that stigma has gone away, especially in the last 2, 3 years, right? That it is okay for a promoter to liquidate 2, 3, 5% of his holding, and he is able to encash the wealth that he has created. Now that's very important because once he gets that liquidity, he in turn will again invest, right? And he could invest in other ventures. They want to diversify, they want to back maybe other ventures, or they will come, or this money will come back into the market, or they are buying premium real estate as we see all across the world. But I think this unlocking of wealth is also one of the reasons why I think availability of risk capital has improved dramatically. I think the other thing is that today, earlier private equity funds had to really wait for 6, 7 years and a boom in the capital markets to exit. Today, we are seeing in the last 2, 3 years, we've seen PE investors have been able to completely unlock large equity blocks and exit. Now, this is important because once the PE guy knows that he can exit, that means that he will take a bigger bet, right? So the whole cycle of access to risk capital is improving as larger and larger parts of the population start participating in this activity. And I'm sure that now there will be far more innovation that will also happen beyond equities, right? For example, we ourselves, one of the other products that we are thinking in the GIFT City is to start a long short fund, for example, right? Today, it's a very small universe or alternate asset class, but I'm sure that as India's capital markets become more deeper, we will be able to run effective long short strategies. And I think there will be a lot more innovation that will happen. So I think one is that investments in equities has got democratized deep into the country. You look at some of the online brokers and the wealth managers. And secondly, I think that large pools of capital are getting unlocked as PEs and VCs and promoters are able to sell and unlock liquidity, which then again can be recycled back by further risk taking. And I think this virtuous cycle is what is required. I think Silicon Valley became Silicon Valley because they had access to risk capital and they could produce these crazy companies like the Googles and the Microsofts and now the Teslas and the Nvidias of the world, right? So we needed to create that ecosystem. I think finally we are getting there. So whether it is, DeepSeek or AI, I think Indians naturally, because of our language advantage in English, our mathematical and engineering backgrounds of millions of engineers that we have, I think you will see that a lot more value is created. Every technological revolution has actually helped India. We've always been on the services side, but I think in the next 10 years, you will see some fantastic technology and products also coming out of India.
Yeah, that's we all dream of having some product like DeepSeek coming out of India. That's something is everybody.
Yeah, I think, but the only, one thing which I think while all the other enabling infrastructure is there, one thing as a society and as entrepreneurs, we have to change our mindset is to really invest in R&D. I think our companies and corporates who are making a lot of money are not willing to take the risk of investing in R&D. And I think that's what differentiates. If you want to create a deep seek or you want to create a cutting edge technology, you have to sacrifice current profits and invest and take some risk. There, I think the mindset change needs to happen. Yeah, I mean, trying to have productivity and low cost solutions, that's important. I'm not saying that that's not important. But if we want to move ahead, look at what the kind of, leaps that China has taken, in electric vehicles, in solar, and now in robotics and in AI. I think there needs to be a mindset change amongst companies, and there has to be more collaboration between corporates and academia, and more risk taking if you really want to go up the value chain. We just don't want to be the factory of the world or the back office of the world. So that is required. I think everything else we do have now. We have the capital, we have the digital framework. The risk taking needs to come in.
Yeah, totally agree. Now you briefly touched upon what I wanted to ask next. You have been traditionally a long only fund.
Yeah.
What do we expect from Alchemy Capital going forward? You briefly mentioned long short is the way forward. You'll be unlisted investments as well. There is some other kinds of pieces are expected from the fund house?
Yeah, actually, one of the things that is probably not as well known, we have already started working with Kotak as well, is that way back in 2012, Alchemy took a big bet on quants, right? So we built a quant team and what I call R&D. We literally spent a couple of crores every year in building our quant models. We have a bunch of very bright people who are working on it. And it took us 3-4 years to test our strategies and so on and so forth. And in fact, 2019 is when we launched our first pure quant PMS, right? So today, I think in the industry, in the alternates industry, probably we have the longest running quant PMS for almost now. It has a 6-year track record with a reasonable AUM, right? And we've launched many new quant products, quant plus active products. So that's one area where Alchemy has innovated and come up with new products. Long short, as we speak, we are working on that. The testing is going on, and very soon we should be able to launch that. And you mentioned private equity, right? I think what Alchemy has done is that in 2023 we launched our first hybrid AIF, which is the Alchemy India Long Term Venture Fund, and it's hybrid in the sense that 30% of the corpus is invested in private equity and pre-IPO opportunities, mid to late stage kind of private equity. And the balance 70% invest in listed companies, but these are really small and micro cap companies. So let's say under $1 billion in market cap, and some of them are even under 300-400 million dollar in market cap, right? But that requires a special skill because, as I told you, that many of the ultra high net worth individuals and family offices and even some of the corporates are willing to take risk. They understand that investing in some of these companies and backing some of these young entrepreneurs can be very profitable over the long run. So we've created this strategy and platform whereby we do a mix of public and private on the same platform. And that's an innovation that has come because what happens is that in a pure private equity, your money gets locked up for 7 years plus plus. In a hybrid fund, if your listed portion, which is the 70% that you invest, that in a 3-4 years can really mature and actually can pay back your entire capital plus returns, which means that you then have the staying power in the balance 30%, and maybe even that amongst the balance 30%, because we are doing mostly late stage, can also go IPO. So there is a fair bit of liquidity, but our investors also get an opportunity to invest in under researched, backing small entrepreneurs, but they don't have the time and the skill to actually go and find these companies and monitor them, so on and so forth. So I think these are, some of the innovations that, apart from our core of long only equities, a hybrid fund, quant, and long short. I think these are the adjacent areas that
The
Alchemy
hybrid
has
fund
worked
idea
on.
is very interesting. Actually, it
Yeah,
can be a combination of both, and to that extent, one can have the flavor of both sides.
correct.
Now coming across the circle, now coming back to Gift City. Gift City is the regulations are evolving and have been evolving in the last 4 or 5 years. The regulator has been listening. If you are given a choice that what more needs to be done in Gift City for it to become more and more prominent as a the jurisdiction of choice, what couple of things that come to mind?
I think taking a leaf out of, I was just thinking about this, that taking a leaf out of what many states are doing, right? Today, every state has a roadshow, so to speak, right? Invest in West Bengal. It started with Gujarat, right? Uh, I think one of the things which the regulators can do, and with the help of some of us in the ecosystem, is actually to hold roadshows in some of the global capitals of the world. So you go to New York, you go to London, you go to Singapore, and rather than investors coming and trying to find out, you can make some of these things familiar, and you can take a bunch of portfolio managers and fund managers of across asset classes, and probably do a roadshow. That could be to really popularize what GIFT City is, So that's as far as branding is concerned. And as you know, like mutual fund sahi hai, how successful it has been. I think we need to go to where the pools of capital are. That's one idea that we have. I think the second thing, as I said, is that, for example, IFSCA has a phenomenal sandbox architecture where if you want to test out a couple of strategies with your own money before you formalize it and take it to a much more wider audience, I think there needs to be, if we can sync that with, let's say, other regulators so that we can really make it effective, right? I think, as I said, there is a lot of innovation and talent in India. So I think one thing to take this was that if we can really have a truly multi-dimensional sandbox architecture with all regulators buying into it, right? Uh, there may be some tweaks that may be required to do that because you will be the only investor initially in the fund and so on and so forth. So if we can take some of those innovations, then we can truly provide innovative solutions of the future to institutional investors. And I think one other big thing about the GIFT City is that there's a lot of untapped uh, wealth of NRIs sitting outside of India, right? I mean, they've all done very well. It's time for ghar wapsi of their capital, right? So when we do those road shows, etc., I think that's another very, apart from the institutional crowd, I think the NRIs can be tapped very effectively.
Yeah, I mean, for one, I think the 100% participation of NRIs for the funds coming out of GIFT City, I think it's a
phenomenal thing what they did. Yeah, I agree.
So those tweaks, small here and there,
Small
will keep
tweaks
on,
here and there. And I'm sure that, all our regulators are very responsive as they have been. So I think it's also some of our owners to go to them and talk about some of these ideas and get some of these things going.
Yeah, sure. Now, let me come back a little bit. It's formal, informal kind of a couple of questions we want to ask you. Typically, I mean, all the audience and I'm sure the young investors listening to this, what is a day of a fund manager's life? How the fund manager's one day in life goes? You keep reading, you keep analyzing. What do you look at?
Yeah, I mean, our jobs are such that effectively they can be 24/7, but there are other interesting things to do. So, talking about myself, I think I'm an early riser, so I wake up early, and I run. I'm a runner, so I every alternate day I go for my runs. The other alternate days I go to the gym. I come back and then the first thing, because you're so used to, is the newspaper, right? Though today everything is available on WhatsApp, but I still have this thing of physically at least scanning the headlines. So while having breakfast, I would go through all of that. And then, well, my office is in town and I live in Juhu, so there is quite a bit of a ride to office. But in today's digital age, the moment you sit in the car, your iPad, your phone is there. So I go through all the emails and messages. If I have to do some calls, I would do that early in the morning. Kind of reach office. We, you know, 2 days in a week. First thing in the office is I get together with my colleagues. So we have a little investment committee kind of a research meeting where we discuss new ideas, any events that have happened which impact any of our portfolio companies, those are discussed. Also, many of my colleagues are also constantly traveling. So if they've come back meeting companies, then feedback on that. Then obviously a lot of reading. During market hours, if there are any portfolio actions that we need to do, then those are done. But a large part of my day goes into reading research and reading all the time. And then obviously few days of the week I've set aside for meeting clients, right? So sometimes clients want your face time, they want to know your views. But I also meet clients for my own selfish reason, because as you know, many of our clients are very well-to-do people because they are all wealthy individuals. Most of them are business people and entrepreneurs. And not only do I talk to them about their portfolio and markets and stuff like that, but I want to know what's happening in their industry, right? That gives me a very good insight into what's happening really on the ground, right? And some of my best ideas have come out of just talking to my clients, because they are running their individual businesses, and the kind of insights that they will have are quite invaluable. Also, every 2 3 weeks I'm on the road, uh, traveling to various cities to meet companies, and sometimes again to meet clients. So I do that. So it's a and then uh, where you're sitting in the car before sleeping, you want to check what's happening in the global markets. And but I do a lot of reading, and apart from this, I also read a very wide variety of subjects. So I have a big library both at home and office, so I end up reading a lot. So yeah, I mean, that's
No,
broadly.
this is actually across the board. When I speak to fund managers like you, the CEOs like you, I think one thing come across: lots of reading, lots of information. So yeah, I think you have to be on the top of it all the time. It's a almost a 24/7 kind of a thing
Correct.
at all points of time. One last thing from our side is, I have seen your follower list. Who has been your role model for the when you learn from, or some ideas that you like? Who is your role model for the as a investment manager or fund manager?
I think my early my early concepts on investing. My dad was an avid investor, so I learned a lot from him. And he used to say that I don't understand a lot of your technical mumbo jumbo, but I'm a very common sense investor, right? So sometimes very commonsensical observations and understanding of the environment and businesses. So in my early times, I learned a lot from him, watching him, seeing him. Later in life, one of our first institutional investors, he likes to be very shy, but he's a legendary investor. He's from New York, USA, and phenomenal thinker. Uh, and I think that I benefited a lot. Not only did they invest in our fund, which we have domiciled now. He was the first kind of seed investor for us. But I think I learned a lot. I learned a lot about investment behavior and how to think about things at a very conceptual level. So I think a lot of people have shaped, my thinking. And then books are your best friends, right? So you read from everybody to Warren Buffett to the best of investors.
Yeah. Thanks so much. I think it was extremely wonderful to chat with you. It was very enriching and very informative. Thanks so much for being on the show.
Thank you so much. It was my pleasure.
So that takes us to the end of today's Kotak conversation. I hope you enjoyed it as much as I did. Thanks for tuning in, and see you in the next one. Thank you so much.